Friends, in this video for I Thought Wealth, I'm going to talk to you on the topic calling the end of the COVID trade. When COVID struck us, most of us didn't know how to react. The stock markets reacted very badly. So we saw the markets fall every single day for a very long period. That period was clearly excruciating. We simply couldn't bear the pain of being shut in our homes and seeing the stock market going down every single day. But suddenly, after the markets had reached a point of despair, when we felt that there was no hope left, we saw the beginning of a COVID trade. Suddenly, the market started looking at businesses which would benefit from COVID. So, you saw that massive rally in pharmaceuticals, in FMCG, in essentials, in data, in consumption through platforms, in entertainment. So you saw a variety of businesses which benefited from COVID gaining valuations. And this gain was not just restricted to India. It was a global phenomenon. So you saw the Netflixes of the world seeing their valuations soar. Zoom, Robinhood, you saw a number of companies gain value which we would have never expected to happen. Naturally, we also saw that people who never had been to the stock market before saw these companies as great investment opportunities. Those who were new to the market lapped up every single COVID story. So they bought into everything, whether it was Moderna or Netflix or Indian companies. As a result, we saw the market concentrating in a specific set of businesses which were not affected by COVID. Clearly, the boom in tech stocks was also an extension of this trend. So, as the markets recovered, these businesses which benefited from COVID gained disproportionately. As a result, we saw that these businesses attained valuations which we could have never predicted just before COVID struck us. Sentiment reversed so dramatically that we started to factor in higher growth, higher earnings performance, and better valuations. We took them for granted. Just as we were kind of accepting all this as the new normal, accepting that valuations were here to stay and they would always remain high, we are now faced with a very sharp unwinding of the COVID trade. And what is causing this unwinding? First, the world is quickly adapting to COVID. Second, inflation is soaring, and it's a result of how governments across the world responded to COVID. So, as inflation keeps rising and becomes uncontrollable, even in countries where it was never a problem before, we are going to see the rapid unwinding of the COVID trade. The battle against inflation is the first catalyst, but there will be several. For one thing, it would be impossible for businesses which have peaked out during COVID and lost 30-40% as of now to regain those peak valuations anytime in the near future. It could possibly take years for these companies to again attain those high valuations. On the other hand, businesses which were affected by COVID have also started to stabilize. They are now functional and they are trying to pick the pieces up and come back to normalcy. The stock market, which completely ignored these companies, is slowly taking notice of a few of them, and some of these are coming back. Governments have also used COVID to clean up their act and bring their own focus into a better place. The Indian government can be counted as one of such governments. First, the government spending in infrastructure has been put on a fast track, and I would think that COVID has definitely helped us do it better. For one thing, till this government completes its term in 2024, you're going to see government spending, government's investments continue to grow, and that is something which will be a positive for the economy. Similarly, the capex cycle is probably set to revive after many false starts over the last decade. So, we are going to see the capex cycle again revive in the next 2-3 years, and this again is going to see a lot of capital go towards businesses that will benefit from capex. On the other hand, we are also going to see a number of new age businesses get listed and access the capital markets for growth capital. Effectively, COVID gave us a boom in businesses which did not need capital and which benefited from lower inflation. Now, we are seeing that trade unwind, and we'll probably see a different stock market where businesses which benefit from inflation are going to gain value. Businesses which are going to leverage and grow are probably going to be again sought after. We are also going to see that the existing leveraged businesses are going to get much better cash flows, by virtue of which they are going to become less leveraged, setting themselves up for future growth. So, overall, the whole context is changing very fast, and I expect that the COVID trades unwinding, which has been happening, will now pick up momentum. The budget is probably an event which will further accelerate the end of the COVID trade, and we will see a different market emerge in which businesses which suffered from COVID are going to benefit from a new era in the economy. Sure, there are going to be problems, but those problems will again create another set of investment opportunities, just the way COVID created investment opportunities over the last 2 years. So, as an investor, you need to reset, you need to think afresh and prepare for a different stock market, a different kind of an economy, a different investment setting, and seek different opportunities. Thank you for watching this video.